All right, we still got to see a red. You have the S&P 500. I can see it if I look here. Down about 0.5%. The NASDAQ is where the selling is today, down 1.3%. And the Russell 2000 of small caps is down about 1.2%. My next guest says the trend, however, is up, and it's coming at the end of the year. He says any pullback is viable. Joining me now, Howard Capital Management President, CEO, and Portfolio Manager Vance Howard. I didn't want to steal your thunder, but you say we've got a low right now. You should buy these dips. We're going to come roaring back come the end of the year to what, S&P?
I think we'll exceed 8,000 on the S&P. I think it's a great time to buy. I think what's going to happen is you get a pullback in September, which is kind of a normal lull in the market as it goes. But you've also got the midterm elections coming up, which is going to put a little more downward pressure. And I think it's going to create terrific opportunities for investors.
I'm just not impressed by the S&P is now at 76.97.
Well, like we were talking about earlier,
Come on.
I said 8,000 earlier. We were saying that 4 or 5, 6 months ago, so I think that's been a pretty decent run. Now, look, if it breaks through that out 8,000, look, we'd be at 82, 8,300 by the end of the year, and that's a nice run also.
Can you look into 2027?
I think 2027 is going to be a fantastic year. Earnings are strong. I think that if we can get this Iran conflict behind us a little bit, I think you can take a lot of pressure off of the markets, and you can see it go higher. I think there's a lot of wonderful companies making a lot of money out there.
Let's talk about that. Yeah. We're nearing the end of earnings season. About 77% of the S&P 500 companies that have reported have beaten the EPS estimates for the quarter. That's the bottom line.
By 7%, which is an even larger margin.
That's incredible. How are they able to do that with all of these headwinds?
Well,
higher oil prices, higher AI costs, interest rates?
AI costs are bringing some things down. But, I think AI costs is bringing things down more than people realize. And I think that people are also getting more diligent in how they're managing their business, especially CEOs, and the way that their processes are being administered. And I think that it's showing up in earnings.
Target tomorrow, Walmart Thursday. What do you expect those major retailers to say about the U.S. consumer?
I think they're going to say the U.S. consumer is strong. I mean, you look at Costco today. Costco broke out, but it also is starting to move back up and higher because of this Medicare Advantage thing that they're taking advantage of. But you're looking at the retail outlets. I think they're looking really strong. The consumer's still strong.
Vance, does anything keep you up at night?
Yeah, the Iranian deal. I wish that it would go away.
Oh.
And one reason is because of the volatility. You look at oil. Oil's almost impossible to trade right now because you get a tweet out of the White House and oil goes down 10% in a day. And so it's going to be a real challenge to trade oil. But, if they can get that conflict behind us, I think it takes a lot of pressure off of inflation. I think it takes a lot of pressure off Warsh, the new Fed chair. And I think that's a clear headwind eliminator for us to move higher into year end.
What about the spike in U.S. bond yields?
I was watching that today, too. But, if he's not going to raise rates, it looks like the bond market's going to do it for him. And because you're starting to I don't think we've had rates this high on the 10-year since 2007. And so rates are organically moving higher without the Fed doing anything.
Yeah, the 30-year at 5.3%. That is a 19-year high. It's not just a U.S. problem, but we're feeling it. Japan, France, you name it. But these are major economies that like to spend a lot of money, and unfortunately, it comes at a cost. So what do you expect from Kevin Warsh's tone when he speaks at Jackson Hole at the end of the month?
Well, he's been very candid that he really doesn't want to get in front of the podium. And one thing about our former Fed chair, I hated when he got in front of the podium, was every time he did, he knocked the britches out of the market. It went straight down because he couldn't get anything right. So sometimes less is more. And I think what the Fed chair is doing now, I think less is more, and I think that's productive.
So we had Peter Cheer came on yesterday, and in fact, Tom Hayes said today they're expecting rate cuts this year. Peter Cheer has seen one possibly in September, but he thinks you're definitely going perhaps 2 by the end of the year. Is a rate hike still on the table in your view? Do you agree with him that a cut is possible?
I don't think anything's going to happen in September. I think they'll leave rates alone. Do I see them dropping rates at this point? No, not unless this Iranian issue clears up in a very, very large way, which I don't see that happening that quickly. But I don't see them lowering rates, no. And I also don't see him raising rates. I think he's got in a sweet spot right here. Let things sort of play out. Let's see what happens, because if the Iranian issue starts to back off, you could see inflation back off.
Yeah, and with the Iranian issue comes the price of oil, stuck at $85 a barrel now. I mean, that's the number you want, $25 less than where we are here. And if you look at here, this is the SPR. You're under 300 million for the stock level. I mean, that's the lowest since, what, the 1980s, 1982. Is there a way to play this terrible situation?
I have never been a big fan of tapping into the reserve. That's just not been my thing. I think, but you know, with our domestic oil producers over here, we're doing quite well. But internationally, they're spending a lot of money on oil and gas. And your last guest was talking about how many things are made out of petroleum.
It's shocking.
Everything from shoes to your purse to whatever the case may be, even Christmas trees.
So how do you play this?
I think the way you play it is you've got to be very, very patient. You're going to have to be very, very nimble is how you trade oil. And like I said, oil is getting to the point that it's going to be tough to trade because he does a tweet
Vance
and goes 10% one way or the other.
Thank you, sir.